Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. The higher time frames, like the quarterly and monthly charts, usually change slowly. So you can also check my previous videos for reference when needed. Now, let's begin with this week's outlook. Now, let's look at the weekly chart. On this time frame, we can draw an upward trend channel. The highs have been gradually declining since July 2024, forming a descending trend line within the broader uptrend channel. Currently, price action has stabilized around the intersection with this descending trend line. Last week's movement was quite limited, remaining entirely within the body of the previous week's candlestick, forming what is known as an inside bar. This pattern suggests the potential for a temporary correction. As mentioned in last week's video, possible retracement levels to watch are the 23.6% Fibonacci level near 151, and the 38.2% level around 149. Both measured from the upward move that began in late April 2025. These price zones have recently been respected by the market, so a pullback toward them would still be within a normal correction range. If the pullback becomes stronger, the 61.8% retracement near 145.5 could act as a deeper support. However, if price breaks below this level, we should be cautious of a larger decline. Conversely, while the probability may not be very high, if price breaks clearly above the descending trend line, the next target would likely be around 158, a level that drew attention in late 2024. Next, let's look at the daily chart. On this chart, an upward trend line can be drawn starting from the April low. Last week, price failed to break clearly above the recent high near 154.4, showing limited volatility and closing the week around 153.4. The key resistance area on the upside remains near 154.8. A wedge-shaped pattern can be observed here, and the structure appears close to a potential downside breakout. Some degree of correction seems likely in the near term. Using the September 17th low as a base, the 38.2% retracement level near 151, and the 61.8% level near 149, are important zones to watch for possible pullbacks. If a deeper correction develops and the green upward trend line is broken, further downside could follow, so traders holding long positions should remain cautious. Overall, the 151 level stands out as a key cluster zone. It aligns with the 23.6% retracement on the weekly chart, and the 38.2% retracement on the daily chart. Many traders are likely paying attention to this price level. In the short term, minor corrections are possible, but the broader trend remains upward. We may be approaching an important stage, where short-term momentum could realign with the longer-term uptrend. Let's stay calm and avoid being influenced by short-term volatility, keeping long-term analysis in mind as we approach the market this week. Thank you for watching today's analysis. If you found it helpful, please subscribe and click the like button. Let's continue to approach the markets with patience and discipline. See you in the next outlook.